Now, coming in 2011, there is also some new things, rebates for excess medical loss ratios, and the prohibition of over-the-counter drug reimbursement.
Well, let's talk both of those things. We'll talk about both. The first one, though, the over-the-counter drugs, is the easiest. Currently, many plans offer what we call flexible spending accounts, and what those are is it's a permission for employees to set aside money out of their paycheck on a pre-tax basis to pay for medical expenses their insurance doesn't cover. So oftentimes over-the-counter drugs, for instance, like whether it's aspirin or eye drops, any number of different types of things you would buy at a pharmacy, have been eligible for reimbursement under that flexible spending account. So it's like a savings account, but it's a tax-free savings account that can be used for that expense. The federal government has just said, you know, you can use that for medical expenses that where a doctor prescribes something, but we're not going to let you reimburse over-the-counter drugs any longer in the absence of a prescription. So you can buy insulin, for instance. A diabetic can buy insulin over the counter now. But if the doctor can just issue a prescription and it's still reimbursable under that flexible spending account. So it just changes the tax deductible nature of those kinds of expenses. Now,
are these reductions in part due to some of the cost containment controls that Congress is trying to put in?
I mean, this is a very expensive bill, very, very expensive, and some of the measures in the bill were intended to reduce the total cost of that bill. So by removing and taking away some of the current tax deductions, obviously that increases revenues that will be used to offset in part the cost of this bill. Still a very costly bill.
Yeah, and some of the most costly and most controversial parts of this bill come into effect in 2014. And let's talk about those individual mandates that come in 2014.
Well, the individual mandate is the most controversial piece. In fact, that's really the impetus behind the Attorney General's lawsuit and several other lawsuits that have been raised over the course of the last few months since the bill was enacted. The argument is whether the federal, or the question before the courts will be whether the federal government does have the authority to impose upon its citizen the requirement to buy a commercial product. In other words, can the federal government make you buy insurance? So that's likely to, that will proceed. The courts are going to have to address that issue, but it could be some time. The importance of the mandate, really, for the purposes of this bill is it's another important provision of the bill is that anybody who's buying coverage is able to obtain it without a pre-existing condition limitation, and they don't have to seek or go through medical underwriting. In other words, insurance companies are going to have to provide coverage if you apply, and they're going to have to apply full coverage, no limitations. The problem is, however, in the absence of a mandate, if you have that guarantee issue availability and no pre-X, if you don't require everyone to apply, the only people who will apply are those who are likely to be the most ill. So that just raises the cost to everyone. The purpose and fundamentally, insurance is a spreading of risk. You have some combination of the young and the old, the well and the not so well, and you spread that risk amongst everyone. So you have to compel everyone to be in that pool in order to spread that risk evenly and to make sure that rates don't go up because only the older, sicker people enroll for coverage. That's what that mandate is intended to accomplish. There is really minimal penalties for noncompliance, however, so there's some concerns about the efficacy of that particular provision of the bill.
So if we're wanting to increase our risk pool, are there incentives to get people to sign up?
There are some incentives, particularly for individuals who work for large or for small employers, fewer than 25 employees, and for others there are premium tax credits as well as cost subsidies. So taking into consideration an individual's out-of-pocket cost, premium, co-pays, co-insurance. In certain income brackets, there are reimbursements available to offset out-of-pocket costs. So yes, there are some. The question is whether the increased cost of coverage, because this most of the provisions in the bill that enhance benefits, you can't increase benefits without increasing costs. And again, there's very little in the bill that will have any immediate impact on the cost of medical services. We're likely to see insurance premiums continue to go up. We're going to see expansions in benefits cause premiums to go up. We're going to see changes in rating models that will cause costs to go up for younger people. They may come down for older people, but up for younger people. So all of those things contributing to higher costs. Will those subsidies be enough to still allow coverage to be affordable to that younger age group, which is, again, most likely to be uninsured? They're at the lower income levels, usually, and they oftentimes are working in either part-time or in work environments that don't offer coverage. So it's still, we're really in a wait-and-see mode about what's going to happen ultimately.